What's happening, traders and investors? It's Rod with Power Group. Welcome back on the Pursuit of Wealth. It is Saturday, April 2nd. Hope you're having a fantastic weekend so far. And in today's video, just a short video, we're going to be discussing why do people compare Amazon and other behemoths to, say, the MJ sector or a cryptocurrency. I'm going to give my thoughts and opinions on that. It seems that there's people on both sides of the fence when you bring it up and you compare the two. Some people are just absolutely disgusted that the fact that you're doing another Amazon comparison. Some people understand. So I'm going to break down why I think a lot of people are turned off by this comparison and why a lot of people understand the comparison. And I am on the side of understanding and that it's not exactly apples to apples, it's apples to oranges, and we're comparing the adoption curve and the growth curve. Before we get to it though, make sure to smash the like, subscribe to the channel, tick the bell, and you'll be notified on any future videos. Jumping into the first article. So again, you've probably seen an article like such as this, how this company is becoming the Amazon of the MJ industry, or this one here, Meadow is the Amazon of MJ. And then we had a video of Sebastian St. Louis and Hexo saying that he wants Hexo to be the Coca-Cola of the MJ industry. So why are we seeing all of these comparisons? I'm going to backtrack. I share this in my YouTube channel and the community page. But real quick here, blast from the past. Just remember, Amazon dropped in 2000 and lost 95% of its value. You can see here back at the peak of the .com bubble, when the bubble burst, you can see here we lost 95% of its value. We went from about $114 all the way down to about $5. And the reason why that happened is because of market cap, right? That would never happen today. So let's just go back here. Lost 95% of its value after the .com bubble popped. Fundamentals and numbers do not matter in a bear market, and this is a great example of that. Same vice versa with bearish news in a bull market. Amazon's stock price continued to free fall in the short term, but long term, we all know the story. This happens to any new burgeoning industry or technology that is highly disruptive, i.e. tech companies, Internet 1.0 or 2.0. We had the Internet 1.0, TCP IP and the actual Internet. Then we had Internet 2.0, which was, Amazon's and Apple's, the companies that were built on top of that layer. But that was the Internet of information. Now we have Internet of money, or Internet, you could say 2.0 or 3.0, however you want to look at it. And some say that is more valuable than Internet of information, right? We also have electric vehicles and MJ stocks, right, etc., that are still very, very nascent and still a burgeoning and emerging market with lots of growth still to come. Speculation matters the most in the short term, but long term we will start to see fundamentals play more of a factor. So these fundamentals will play more of a factor in the MJ industry and the cryptocurrency industry. We know that, cryptos, there's some cryptos that meme currencies, the meme cryptos that don't actually have a use case. They really don't do anything. And there's some, look at Ethereum Classic. It's one of the worst cryptocurrencies on the planet, and it still continues to see massive, massive gains. And that's because fundamentals don't matter yet. So this is because of the massive hype and euphoric moments followed by max fear. It's also due to the market cap. So when there's, if there's only $20 million into a stock or a cryptocurrency for market cap, you only need another 20 million, so 40 million to double the value, right? But if a company's worth $1 trillion like Amazon, or 1.6 trillion in Amazon's case, it's going to take a lot more for that multiplier effect, right? So it's called the law of diminishing returns. The more the market cap grows and the more a company gets adopted and a technology gets adopted, the less returns over time. Market makers intentionally do this to shake out the weak hands, and then they pawn off their expensive stocks on retail. And we also see stock splits, which we're seeing in Amazon and Tesla right near the end of a bull cycle, because I think that's to pawn that off on retail who otherwise wouldn't be able to buy it because it's too expensive. So Amazon's going to be doing a 20-to-1. Which will put their stock's price around $150. This happened back in the .com days as well. They did 2 stock split before this massive 90% correction, 95% correction. So just something to be aware of. I also did a video, check out my latest video on that as well. But I did some warning signs on the broader market, the S&P 500 and the crypto space. So market makers intentionally do this, and they maximize their profits and gains on the way up, and then they short it on the way back down. They rinse and repeat, and it's usually the retail investors that always lose. Just remember, there is always more to a company or a stock than just looking at the current share price. Time in the market is usually better than timing the market, especially in high growth and speculative markets where fundamentals don't yet matter. And basically, this is a recap from their 2000 article that they published to shareholders. It said, ouch, it's been a brutal year for many in the capital markets. Now just imagine how many people got shaken out there on Amazon from that 95% correction. And then look what went on to happen, right? We had, dial-up became high speed, and then we had all of these huge technology improvements that, sent the stock parabolic over time. And if we just take a look at the returns from that low, you're looking at like 68,000%, right? That's never going to happen, in my opinion, from these levels. It's worth too much. So the risk is to the downside, in my opinion. And the reason why they were able to crash at 95% was because of the market cap being so low, right? And if you take a look at where we are now, in order for Amazon to double, we would need to go, in order to go another 100% from here, so to double your money, if you put $1,000 looking to double that into $2,000, the Amazon share price would need to go to $6,500. So that just goes to show you, but back here, right, when we were down at $5, all it needed to do was go to $10 to double, right? So you got that multiplier effect, and the market cap was so low. But on the flip side, there's no way they're going to crash, Amazon, now that it's a $1 trillion market cap. There's no way they're going to crash at 95% this time, because if they did, that would bring us down to about $150 share price. Now, we might go back down to $150 on a reverse split, or not a reverse split, a regular stock split, 20-to-1. Essentially, that just, decreases the price and it increases the amount of shares, right? So it's really just an accounting trick. It's not changing anything. But again, I highly doubt that's going to happen. The reason why they were able to tank at 95% before was because the market cap was so low. And we're not comparing Amazon to MJ. We're not comparing Amazon to Bitcoin, because they're two very different things. We're comparing the adoption curve and the growth cycle, right? And where we are in the overall adoption of the technology or the stock, and the growth of the company, right? And the market cap. So again, we all know that Amazon started by selling books, and now they sell everything, including the kitchen sink, right? So we're not comparing, and MJ is federally illegal in the US. There's some countries that offer the death penalty just for possession, right? So it's not the same. There's so much growth to be had in the MJ industry, in my opinion, and you can't use the same valuation metrics that you would to say value a company that is a grocery store chain or a home improvement store, right? All of those staples and all of those, commodities, those products are not federally illegal, and you don't get, thrown in jail or the death penalty for having some lumber in your backyard, right? So I would argue that the growth potential of MJ is actually, we're still very much in the early adopters and innovators phase. We are not even close to the early majority phase. You could say that, if you're investing in Amazon now, you're in the laggards, right? The opportunity has really come and gone. Not to say that there won't be opportunity to make money with Amazon. There's also options and things like that. But let's just go back and compare Amazon in the early days, and this goes back here to 2001 is the furthest that it goes back, but that is fine for this example. So we were back at 6 billion in January of 2001. All we needed to do for the company to double in value was to see 12 billion, right? In order for that share price to double. And then look what happened over time, right? It was very similar to the Bitcoin chart, but you can see here, we started off in 2001 around 4 billion, 2002, 7 billion, 2003, 21 billion. And then you can see 10 years later, we eclipsed the 100 billion. And then another 10 years later, we eclipsed the 1 trillion. And now we're getting close to the $2 trillion mark. So again, the law of diminishing returns, right? It's going to be harder. The multiplier effect is going to be harder. In order for this stock to double, we would have to see, $3.2 trillion market cap, which is just not going to happen anytime soon. Maybe not ever. Some would argue that it will. Some would argue that it won't. But personally, I think it could happen. It's just I'm not interested in it because, like I said, it's the opportunity of that multiplier effect has really come and gone. So I would say that the ship has sort of sailed when you're looking at a company that's $1 trillion in market cap. You're a little bit late to the party, and that's why I was screaming from the rooftop in 2018. I was saying to buy Tesla when we were only valued at 50-60 billion, and then at one point there we were valued at 1.2 trillion, right? So in order for us to double, all we needed to go from 50 billion in 2017 was 100 billion, right? Now at the peak there, in order for Tesla to double, it would need to reach $2.4 trillion, right? That is again, over time, the returns are less and less, right? The opportunity for growth and the opportunity for these astronomical gains is getting lower and lower. And you can see here in 2010 it was valued at 2.5 billion, and just a couple years later, actually, we hit the 10 billion, over the 10 billion mark. And then into 2020, you can see here we went from 75 billion in 2019. So that is the growth I'm talking about, right? 783%. We went from 75 billion all the way up to 668 billion, and then we eclipsed the 1 trillion, right? So now, the risk is to the downside, in my opinion. Again, not to say that there won't be any opportunity with Tesla, but in order for Tesla to double from here, in the market cap and the share price, right, that would put us up to $2,100 for Tesla's share price, right? Just to see a 100% gain from here at 2x, so $1,000 into $2,000. So again, this is why I was interested in Amazon back here in 2017, 2018 into 19. This is when I was buying Amazon. I have no position in Amazon anymore. I have no interest. I sold it. Granted, I didn't time the top. Can't time the bottom. You can't time the top either. But as long as you're selling near the top and buying near the bottom, that is my investment philosophy. And again, the risk now is just to the downside. And I did a video on the S&P 500, like I mentioned, in crypto. Look at that video, major warning signs, and we could be entering a multi-year bear market, in my opinion. So for an example, look at Canopy Growth for all intents and purposes. 2012, we had 0.43 million market cap. In 2014, we had 0.07 billion. In 2017, we finally got over the 1 billion and we hit 4 billion. 2018, we hit a high of 9.21 billion, and now we're back down to that 2.91 billion. So now you essentially are going back to that 2016 to 2017 area where the market cap was back into the 2 billion. So again, if we start to see something similar where we go from 2 billion up to 10 billion to 100 billion to 600 billion, again, I don't think Cannabis and MJ is really going to see that same price tag, right, as a share price, or even the same market cap. I'm just talking about if we go to 10 billion from here, right? Those are some huge returns. And this is now the time to start loading up on MJ, in my opinion, when we're down at 52-week lows and a huge bear market. We've been in a bear market essentially for the last 4 years. And if we just take a look at Bitcoin, again, for Bitcoin to double from here, the market cap would have to be at 1.8 trillion. So again, the point of the diminishing returns, right? And just look at back here, right? When even in 2017, after the bubble popped, in 2018, we had the low here right around 3,000 was the price, but the market cap was only 60 billion. So in order for the price to double, all it needed to do was hit 120 billion, which it easily did, right? So it's just over time, we're starting to see less and less returns. And something I want to share with you here is the world's biggest companies versus Bitcoin in the last decade performance. I know this video is more about MJ specifically, but again, it's all relevant. We're comparing the growth cycles and the adoption curves to all these technologies and industries because they're the same, right? They all started off at zero market cap and started to grow, right? Bitcoin started off at a zero market cap. Everything started, Amazon, Apple, MJ companies, right? But look at what Bitcoin did over the last 10 years. If you had invested $100, you'd have $9.2 million in Bitcoin. If you invested $100 back here in Amazon, you'd have 3.3 thousand. So again, it's just huge returns over time. Again, I don't think MJ is going to hit that cryptocurrency market valuation, the whole market cap. If you take a look, the total crypto market cap is projected to hit 10 trillion by 2023, right? And how much money is in the world? They say, this is from 2020, there's currently around 36.8 trillion in narrow money. This includes notes, coins as well. So I'm not going to go into all of this, but the figure reaches a staggering 90.4 trillion. The worldwide amount of money has been valued at 215 trillion, while property is valued at 217 trillion. So you could say financial experts estimate this is worth 630 trillion. So you're looking at, in 2022, you're looking at over $1 quadrillion, basically just money, all forms of money and property and derivatives. So, and then look at what the MJ industry is projected to be 90 billion or 100 billion by 2026, right? So we're comparing apples to oranges. We're not saying that, you know, Amazon, MJ companies, or even the market cap is going to hit 1.6 trillion anytime soon. It's probably not. It doesn't need to hit 1.6 trillion. It doesn't need to hit a market cap of $10 trillion to see life-changing gains, right? That is the whole point, is that over time, investing in MJ companies now is going to be very lucrative. So the multiplier effect and the opportunity for, you know, 10x to 100x gains. So if you're looking to invest $1,000 today and then turn that into $10,000 or $100,000, in my opinion, the best opportunity right now, not just given where we at in the everything bubble of 2022, I think the best opportunity to hit those 10 to 100x returns, to invest in, again, not financial advice, this is for entertainment purposes only, do your own research, but this is just my opinion. I think that we could easily, if any of us invest $1,000 into MJ, we could easily turn that into $10,000 to even $100,000 over the next 3 to 5 years. With that, going to end that video here today. Let's continue the conversation below. Share this video with anybody that you may find value in viewing it. And also, just let me know if you agree with me, if you disagree with me. Again, we can all be adults. We don't have to agree on everything, or we can disagree on some things. Let's just have some thoughtful discourse. So if you want to voice your opinion below, I'd love to hear from you. As always, let me know if you agree with me, disagree with me. Like I said, always a blast hearing from you guys. Looking forward to seeing the comments below. I know there's been a lot of people on both sides of the fence, so really gonna be really looking forward to continuing the conversation. With that, thanks so much for joining us on The Pursuit of Wealth, and make sure to smash the like, subscribe to the channel on your way out, and we'll see you again on the next video.